Imagine planting a tiny seed in your backyard. At first, it's just a fragile sprout, small and barely noticeable, but you water it regularly, give it sunlight, protect it from pests, and soon, almost like magic, it begins to grow. Year after year, that tiny seed becomes a sturdy plant, then a tree, then a source of shade, fruit, or even more seeds. This is the miracle of compounding, a simple yet powerful force that not only fuels the natural world, but also has the profound ability to grow your wealth, turning modest savings into a fortune over time. But what exactly is the rule of compounding, and how can it make you a millionaire? At its core, compounding means that not only do you earn returns on your initial investment, but you also earn returns on those returns. It's a snowball effect. As your money grows, it gains even more power to grow. This happens because each period, whether that's a month, a year, or another span of time, your earnings are added to your original investment, and then those combined amounts continue to earn more. Let's think of a simple example. Suppose you have $1,000 and you invested in something that earns you a steady 10% per year. In the first year, you'll earn $100, bringing your total to $1,100. Here's where the magic kicks in. In year 2, you don't just earn 10% on your original $1,000, you earn 10% on $100. That means you gain $110, not just $100. By year 3, you're earning 10% on $1,210, and so on. Each year, your gains themselves earn you even more, and this effect accelerates over time. This principle was so impressive that Albert Einstein supposedly called compound interest the eighth wonder of the world. Whether or not he actually said it, the sentiment rings true. Compounding is that powerful. But how can this help you build real, lasting wealth? To answer that, let's dive deeper and explore 3 main ingredients that fuel the rule of compounding: time, rate of return, and consistency. First, and perhaps most importantly, is time. Compounding rewards. Patience above all else. The longer your money is invested, the more pronounced the compounding effect becomes. In the first few years, growth appears slow, even underwhelming. But as time passes, the curve steepens, and the amount grows exponentially. This is why financial experts everywhere stress the importance of starting early. It doesn't matter if you can only save a small amount. Time is your greatest ally. To see why, let's compare 2 friends, Alex and Jordan. Alex starts saving at age 25, putting away $2,000 a year into an investment that averages a 7% annual return. Alex does this for 10 years and then stops contributing, letting that investment just sit and grow. Jordan, meanwhile, waits until age 35 and starts saving the same $2,000 a year at the same 7% return. Jordan contributes every year until age 65, a full 30 years. Who do you think ends up with more money at retirement? Despite only investing $20,000 compared to Jordan's $60,000, Alex's head start and the power of compounding mean Alex ends up with more. It's not magic, it's mathematics, fueled by decades of compounding returns. The second ingredient is the rate of return. The higher your returns, the faster your money compounds. While it's tempting to seek out high-flying investments with sky-high returns, it's important to balance risk and reward. A steady, realistic rate, say 6 to 8% per year, which mirrors the long-term average of the stock market, can be incredibly powerful over long periods. Even a small increase in return makes a big difference over decades. For instance, if you invest $10,000 at a 5% annual return for 30 years, you'll end up with about $43,000. Boost that return to 8%, and you'll have nearly $100,000. The difference isn't what you put in, it's what your money earned and how those earnings themselves were reinvested year after year. The third ingredient is consistency. Like watering your tree regularly, consistent contributions fuel the compounding engine. Even small, regular amounts can grow into a fortune. Imagine you invest $200 per month, every month, starting at age 25, into an account that earns 7% annually. By the time you're 65, you'll have contributed $96,000 out of pocket, but your account could be worth over $500,000. Keep at it a little longer or increase the contribution, and you could easily cross the $1 million mark. So, how do you harness the rule of compounding to become a millionaire? Start early, invest consistently, and be patient. Automate your savings so you never miss a contribution. Reinvest your earnings so every bit of return boosts your future returns. Be mindful of fees, as they can eat away at the compounding effect over decades. Also, remember that compounding doesn't just apply to money. It can apply to skills, relationships, and habits. Every small improvement, every bit of learning, and every positive action can build on the last, creating a foundation for exponential growth in all areas of life. Many millionaires weren't born wealthy. They simply understood and applied the rule of compounding, letting time and discipline do the heavy lifting. They avoided the temptation to cash out early, weathered the ups and downs of the market, and trusted that slow and steady progress would win the race. One of the quickest ways to sabotage your journey is to interrupt the compounding process, pulling money out when markets drop, chasing the next big thing, or giving up before results appear. Instead, embrace the long view. Know that while the first few years may feel slow, the avalanche of growth comes later. Compounding is like pushing a snowball uphill. At first, each roll adds only a bit more. But eventually, as the ball grows, it picks up more and more snow until it's nearly unstoppable. In summary, compounding is the quiet superhero of wealth building. It doesn't require genius, luck, or a massive inheritance. It only demands patience, a little discipline, and a willingness to let your money work for you. The sooner you start, the greater the rewards. So nurture your tree, tend to it year after year, and watch as the miracle of compounding transforms your modest beginnings into the $1 million fortune you once only dreamed about.